Ever found yourself pondering over the intricacies of the stock market? Well, let's delve into this fascinating world. The stock market, in its simplest form, is a marketplace for buying and selling shares. When you think of shares, envision them as tiny slices of a company that you can own. Now, why does this market exist? It's a platform where companies can raise capital to fund their operations, growth, and innovation. On the other side of the coin, it's a place where investors, like you and me, can potentially grow our wealth by investing in these companies. This market plays a pivotal role in the global economy. It's a barometer of sorts, gauging the health of not just individual businesses, but entire sectors and economies. So it's not just about making money, it's about fueling progress and prosperity. The stock market, as you see, serves as a crucial component of our global economic system. Dive into the depths of the stock market and you'll find a whirlpool of terms and concepts. In the vast ocean of finance, the stock market is a bustling hub where money changes hands in the blink of an eye. But what are the basics that keep this bustling hub afloat? Let's start with shares. A share is a unit of ownership in a company. When you buy a share, you're buying a small piece of that company. You become a shareholder, part owner of the business. Now let's talk about how companies sell these shares. They do it through something called an initial public offering, or IPO. Imagine a company as a ship that's about to embark on a voyage. An IPO is like the launch of that ship into the vast ocean of the stock market. It's when a company sells its shares to the public for the first time. But where do these transactions take place? In a marketplace, of course. But in the world of stocks, this marketplace is known as a stock exchange. It's a virtual or physical space where buyers and sellers meet to trade shares. Some of the most famous stock exchanges include the New York Stock Exchange and the London Stock Exchange. Trading is the heart of the stock market. It's the process of buying and selling shares. If you think a company's value will rise, you might buy shares hoping to sell them later at a higher price. Conversely, if you believe a company's value will fall, you might sell your shares before the price drops. But remember, the stock market is not just about buying low and selling high. It's also about dividends. These are a portion of a company's earnings that it distributes to its shareholders. If you own shares in a company that pays dividends, you'll receive a regular income from your investment. These terms form the basic vocabulary of the stock market. You might be wondering, how does this vast, complex system work? Well, let's dive in and unravel the mystery. At its core, the stock market is a marketplace. Just like your local farmer's market where you buy fresh produce, the stock market is where people buy and sell shares, or stocks, of companies. But instead of tomatoes and apples, you're buying a tiny piece of a company. When a company decides to go public, it splits itself into many pieces, or shares, and sells them to the public through a process called an initial public offering, or IPO. This is how a company raises money for growth and expansion. Once these shares are sold, they can be bought and sold on the stock market. Now, to buy or sell shares, you need a middleman, or a broker. Brokers are individuals or firms that are licensed to buy and sell stocks on the exchanges. You tell your broker how many shares you want to buy or sell, and at what price. Then your broker takes care of the rest. But how are prices determined? This is where supply and demand come into play. If more people want to buy a stock than sell it, the price goes up. If more people want to sell a stock than buy it, the price goes down. It's the basic principle of economics. And then there's the role of market makers. These are firms that hold a certain number of shares in a company, ready to buy or sell at publicly quoted prices. They help ensure there's always a ready market for every stock, providing liquidity and helping to keep the market running smoothly. So, there you have it. The stock market is a complex system, but at its heart, it's a marketplace where shares are bought and sold, prices are determined by supply and demand, and brokers and market makers play a crucial role in keeping the wheels turning. It's a system that allows companies to raise money and investors to become part owners in those companies. So that's a basic rundown of the inner workings of the stock market. The stock market isn't just about numbers and shares, it plays a pivotal role in our lives. Now, you might think, hold on, I'm not an investor, so how does it impact me? Well, the answer is, in more ways than you might realize. The stock market is a powerful engine that drives economic growth and creates wealth, influencing every aspect of our lives, from the prices we pay for goods to the jobs available to us. Let's delve a bit deeper. The stock market fuels economic growth by providing companies with the capital they need to expand and innovate. When a company decides to go public, it sells shares of its ownership on the stock market. This money can then be used to invest in new projects, hire more staff, or research new products. This, in turn, stimulates the economy, creating jobs and pushing forward technological and societal advancements. But it's not just about big corporations. The stock market also offers numerous opportunities for individuals to increase their wealth. Through investing in stocks, everyday people can participate in the financial achievements of the companies they invest in. Over the long term, investing in the stock market has proven to be one of the most effective ways for individuals to accumulate wealth. Beyond individual investors and companies, the stock market plays a critical role in the health and stability of our pension funds and retirement accounts. These funds are often invested in the stock market, with the aim of growing over time to provide a secure future for millions of people. In addition, the performance of the stock market is often seen as a barometer for the health of the economy. When share prices rise, it's often a sign of a growing economy. Conversely, falling share prices can indicate economic troubles ahead. So, you see, the stock market is more than just a place where shares are bought and sold. It's a vital part of our economic infrastructure, underpinning our financial system and playing a crucial role in our everyday lives. Hence, the stock market is an engine driving economic progress and individual prosperity. Like any financial venture, the stock market comes with its share of risks and rewards. Let's dive into the deep end and start with the risks. The stock market is notoriously unpredictable, with prices fluctuating due to a myriad of factors. Economic conditions, corporate earnings, geopolitical events, all these can cause volatility in the market. It's like a roller coaster ride, thrilling yet nerve-wracking. Another risk is the potential for financial loss. The value of your investment can decrease. And there's also the risk of a company going bankrupt, which could mean losing your entire investment. Ouch. Lastly, there's the risk of emotional decision-making. Fear and greed can lead to hasty decisions, like selling stocks at a loss during a market downturn or buying stocks during a bubble. It's like being at a buffet where you're so tempted by the desserts that you forget about the nutritious main course. Now let's look at the brighter side, the rewards. One of the most enticing rewards of the stock market is the potential for high returns. Over the long term, stocks have historically provided higher returns than other asset classes, like bonds or cash. It's like planting a seed and watching it grow into a mighty tree. Another reward is the opportunity to build wealth through compounding. When you reinvest your earnings, you can earn returns on those returns. It's the financial equivalent of a snowball rolling down a hill, growing bigger and bigger. Lastly, investing in the stock market allows you to become part owner of a company. You can take part in its growth story and potentially reap the rewards of its success. It's like being part of a winning football team, sharing in the glory of every goal scored. But remember, investing in the stock market requires informed decision-making. You need to understand the companies you're investing in, the broader market conditions, and your own financial goals and risk tolerance. It's not a game of chance, but a strategic play. Balancing these risks and rewards is the key to successful investment. To sum it all up, the stock market is a fascinating and complex entity. It's an intricate web of buying and selling, a marketplace where dreams of financial freedom can become a reality. We've journeyed through the fundamentals of the stock market, unraveling its complexities and revealing its inner workings. We've seen how it operates, a lively dance of supply and demand, and how it plays a critical role in our global economy. We've also delved into the thrilling roller coaster that is the world of investment, highlighting both the potential rewards and the inherent risks. It's a world of highs and lows, of triumphs and disappointments. But most importantly, we've learned that understanding the stock market is not just about making money. It's about financial literacy, about being able to make informed decisions and secure a prosperous future. Understanding the stock market can open doors to exciting investment opportunities and financial growth. Remember, knowledge is power, especially when it comes to finance.